Hello, friends. Welcome to Logistics of Logistics podcast. My name is Joe Lynch. Thank you so much for joining us. Today's topic is the 5 failures of final mile with my friend Jason Burns. How's it going, Jason?
Joe, I'm doing good. Doing great. How about you?
Yeah, I'm excited to talk to you. So, Jason, please introduce yourself and your company and where you're calling from today.
Yeah, I am calling from Austin, Texas. I got to say, by way of New Orleans, I'm a New Orleans boy, so I got to put that in there to my say Austin. But I am currently an insurance producer with CUI Insurance Agency, which is based out of Salt Lake City, Utah. And then I also host a podcast called Last to First. That's the shirt.
Yep. So I know you are a final mile expert, and now you're selling insurance to those final mile guys. But so don't. I'm saying some people are going, how does an insurance guy know anything about final mile?
Great question. And to all my insurance guys out there, I love y'all, but I don't identify as an insurance guy. I really don't. My background, I used to actually run my own final mile business. I was a second generation owner of a company called QCS Logistics that was started back in '84 by my parents. Grew up literally born into the final mile industry. Early memories of riding around in a Ford Ranger pickup truck with my dad and my brother, making deliveries to hospitals. And went to school and stuff and came back and got involved in the family business, took it over, grew it, and then we exited. And then I'm sure we'll get into this later, but after that exit, I joined CUI because I really understood the pain points in going through myself from an insurance standpoint. So I wanted to bring some solutions.
We're going to talk about some of those failures, and a lot of them are related. I mean, they're interrelated, but a lot of them are related to liability insurance. And so I think if you don't come from that space, I talk to a lot of people on final mile, and I describe this as, and this is true for a lot of logistics. It's simple, seemingly, but it's not easy. It's just like diet and exercise. Everyone's like, oh yeah, if you want to lose a few pounds, get in shape, just eat less and work out more. You're like, yeah, that's simple. I'll just do that. It's simple, not easy. But anyway, so tell us a little bit about you. Where'd you grow up? Where'd you go to school? Some career highlights before you joined CUI Insurance Agency.
Yeah. So as I said, I'm originally from New Orleans, Louisiana, born and raised. Grew up in this final mile industry, which back then we called it the courier industry, right? Final mile is kind of a new term, right? So, but that's the latest buzzword out there. So grew up as a son of a serial entrepreneur. My father, who had multiple ventures. One was this courier business, another's a parking management company. But yes, I grew up in the industry, and I think I went away to school, played football in college at Vanderbilt University in Nashville, Tennessee.
Nice. That is not easy. You must have been on the practice field quite a bit, not just a courier.
Yeah. You got to spend a little time honing in your craft if you want to play at the next level. So I was very fortunate to play college ball in the SEC and live out childhood dreams of playing these crazy stadiums. And we kind of started to turn the corner my senior year at Vanderbilt. I think we went 5-6 that year. We got to the 2015 ranked in the country at one point in the season, but wasn't able to continue playing professionally. Not a lot of guys make it there, and I certainly.
Well, I'll tell you though, Vandy's got it, and you have to be in the SEC. It's nothing's easy. Although you guys did win the SEC championship in baseball yesterday, so nicely done. As I was telling you, one of my buddy's son's a trainer over there, but Vanderbilt's got it's academics. That's not an easy school, and you're playing the toughest teams in the biz. I always joke it's hard to be a Michigan fan because we got to play Ohio State every damn year. If you're in Vandy, you got a whole bunch of monsters you got to play every year.
Going through the SEC gauntlet is not for the faint of heart, and it got even harder. You had Texas, you had OU, Oklahoma last year. The stakes just got that much higher, but. I would say, Vandy, yeah, you're right. It's an academic school. Academics first, and that's what I want. I was an academic kid. I was taught that books before ball. So it was a great spot for me. I had a former teammate the year before me in high school that was at Vandy the year before me. So I had someone there that I knew, and so was able to kind of, do both things that I really wanted was, go to a university with high academic standards and also play in, what I think is still the best conference in football in SEC. I joke, I have an older brother who was an All-American punter at Virginia Tech. He's 2 years older than me, and my parents would come to our football games on the weekend, and they would always joke when they're at my game. They would say, "We're at your brother's game last weekend," and after the game, we go back to his apartment, and there's kegs and there's a DJ going, there's a lot of partying going on. We go to your game, and after the game, we go back to your apartment, and you and your roommates are cracking open a laptop or reading a book or writing an essay. It's night and day. So there wasn't a lot of time for play.
You got to introduce me to your brother.
Yeah. So that was my kind of sports career.
So what'd you do after college?
Yeah. So after school, I got involved in the parking business. I mentioned that my family has a parking management company. So I started my career off in Philadelphia working in the parking industry. So I spent 2 years there learning the parking business, really. I managed the parking lot at the Eagle Stadium. That was interesting and could be a whole other podcast episode with the stories there. But I ended up going back to New Orleans a couple years later and really got involved in the courier business, the final mile business, which was called QCS, and worked my way ultimately over a 13-year career. I became the president of that company. We grew it quite a bit. We were honored with being a 4 consecutive Inc. 5000 finalist 4 years in a row.
Wow.
Had a lot of success.
Must be growing.
Yeah, we were able to, it ended up being a perfect combination of, I had my mom, my dad there. We had another business partner who was more of an ops guy, former UPS manager. And then me, this kind of young kid that came in, asking a bunch of questions of why and how and why can't we do this? And so the combination of the experience and some of the inexperience and my willingness to kind of push some buttons really, really worked out well for us. And so ultimately we were able to exit the business. We sold it to a company based here in Austin, Texas, where I live now, called Drop Off Inc. At the end of 2020. So we were able to kind of ride the COVID wave. COVID was really good for our business. I know it was bad for most of the world, but good for last mile delivery. And so we had a good exit. And then I joined Drop Off as their director of corp development. So I did some M&A work. And we helped to identify companies that we can go acquire to continue to expand Drop Off's footprint. And so I did that.
So you got to look at a lot of final mile companies and get a sense for what's working and what's not. Yeah.
Looked at, many of them. And then I didn't mention along my career path, I was fortunate to join in one of the leading final mile associations in the country called the CLDA, which stands for the Customized Logistics and Delivery Association. And so I'm a 15-year board member. I'm almost in finishing my term here. I was the first African-American president of this almost 40-year-old association. So networked, nationally, got to stay abreast of all the issues. So really spent most of my career in the final mile, immersed in it. And that segued me into what I'm doing today. After I left Drop Off, I joined CUI. CUI is I guess it's got to be a 50-year-old organization now. Most of its focus is selling transportation insurance. And they want to expand into the final mile. I was looking for a new opportunity, have a strong network there. And so understand the pain points within the space from a risk management standpoint. I want to bring some new solutions to the industry. And so that's what we'd be able to do.
Excellent. So again, we're going to talk about 5 failures of final mile. And again, I think when you look at final mile, it really kind of came into its own kind of with e-commerce, but also especially during COVID. And I think we saw a lot of challenges pop up. So a lot of times it was gig economy guys, and they said, "Oh, I'll move that for you." They had the initiative, but they probably lacked the operational chops that you need. If you're going to be a big player in this, you have to have operations, you have to have the routing software, you have to have all of the insurances in place. We'll talk about that. It's a lot easier than I got a car and I'll pick that up and drop that off. And there's a lot of companies that popped up and said, "Oh, we'll help you out. We'll recruit a whole bunch of drivers." it ain't easy. Not because they got to be right.
Yeah. The thing that I would always jokingly say, final mile had been the stepchild of supply chain, and I think we started seeing that shift, as you said, in COVID. This industry dates back to, at least in the States here, to the days of Wells Fargo, moving gold from the West Coast back east. That was kind of your first real look at courier, last mile, final mile type deliveries. And obviously, there's been so much growth since then. But COVID really, I think, ripped the Band-Aid off of the opportunities of final mile. And one of the reasons why I call my podcast Last to First is that I fundamentally believe that the last mile is now first in today's supply chain. And the reason I believe that is because you ask any retailer, any shipper, they've got to solve for that last mile first, because it's the one leg of supply chain where it interacts and interacts with their end consumer. And so you have to get that right. To your point, there's a right way to do it, and there's probably a way that needs to be improved. And I think we saw a hodgepodge of all that in COVID, and I think we're starting to see some of that work itself out, where this industry, this sector of transportation is now primed for the next wave of growth.
Yeah, and I think for a long time we had, we'll talk about retail for a second. Retail logistics was I pick up at a warehouse or pick up at, a DC, and I deliver to a store. And the store is responsible for that customer interaction. Then at some point, the omni-channel popped up, and now we have to deliver to homes. Well, we can't deliver to homes in big trucks. We're doing it, with cars and with vans. And the challenge, I think, is you're delivering to a home where there might be, the address might be obscured or broke. Maybe someone doesn't want to answer the door. Maybe there's a dog that bites, and maybe there's a beehive on the porch. There's a million little things that go wrong. You've got a non-professional receiver. And a lot of times you go knock on a door. Right now, if somebody knocked on my door, I'm not answering because I'm talking to you. But even if I was sitting around, I'm not answering sometimes. I'm like, who the hell is that? Is that somebody who's trying to sell me roofing stuff? I don't want it. Right? And I used to tell my kids, used to be if their phone rang, you had to answer it. I didn't matter if Satan was calling, you had to answer it. It's the same with the door knocks. Now it's like, somebody's knocking on the door. Let's pretend we're not here. So it's not easy doing that delivery. But anyway, let's talk about these 5 problems. So the first one, and I'll let you explain, but I'll set it up here. Driver misclassification. What does that mean, and why is it a failure?
Yeah, this is probably the one item that anyone in the final mile space, if you're not paying attention to it, you should, because this is the biggest risk you have in this industry, is making sure your driver model is set up properly, and depending on which model you go with, that you are operating by the letter of the law. So what I mean by that specifically is most people in the final mile space use independent contractors, individuals who are designated by the IRS as 1099s, who essentially are not employees of the business, right? They're their own, owner operators, essentially. Some companies also use, W-2 models and true employees, and some use a hybrid of both, right? Depending on the scope and operation. One of the things you see often that happens in this space is, and we'll get into hopefully insurance later, but if a company is misclassifying their drivers, meaning that they have an individual who's classified as an independent contractor, but they're operating and managing and treating that individual as if they are an employee, you're opening yourself up for a lot of risk. And those could be, first is, let's say you get an accident, so that driver gets in an accident, and he or she, when they go to file a claim, they realize they don't have workers' comp because they're not an employee. And so they're going to be pretty disgruntled, and they'll go call a buddy there that's a lawyer. And then that lawyer is probably going to ask them, if it's a good lawyer, she's a good lawyer, how many more people are like you out there? And they'll figure out how many drivers. And all of a sudden you have a big class action lawsuit saying that you've misclassified 100, 1,000 drivers, how many on your fleet, as ICs when they should be employees because of one little incident. And that one incident can open yourself up to more problems, because if that happened, that goes through, now the Department of Labor is looking at you. They want you to pay back fees that you haven't paid because you have employees and not ICs. And then you got the IRS.
Yeah, when you say ICs, you mean independent contractors.
100%, 100%. So it's a big administrative issue that can lead to operations, certainly. And I think there's a right way of doing it. There's a wrong way of doing it. I think you have to educate yourself and understand how to properly do it. And there's some gray area there, but for the most part, you can pretty much focus in and operate in a correct manner.
Driver misclassification sounds kind of benign, but it could put you out of business in a heartbeat. And I think one of the things that, and let's forget the human toll for just a second, but if I was working for you and you said, Joe's an IC and I don't do any other work, and you're being very specific, hey, Joe, this is what I need you to do Monday, this is what I need you to do Tuesday. And at some point I slip and fall and I hurt my back and I don't have the right insurance. Well, my lawyer is going to say, we're going to go after the owner of this business. We're going after Jason. He's got deep pockets. Let's go after Jason. And he's going to pay your workman's comp one way or another. And, it's easy to start a business and say, everybody's an independent contractor. Lots of people do it that way. It's just, the government has a list of questions they ask. And if you don't fit under an independent contractor, it doesn't matter what your contract says.
Yeah, it doesn't. And depending on what state you're in too, it could, these laws.
California won't even let you have an independent contractor.
Yeah, that's definitely a state that you, I would try to avoid if you could, because it's so litigious, but every state's a little bit different. And you're right. I mean, you have to understand what market you're operating in, and yeah, you can't exercise control over the individual. That's the big thing. So a lot of times what I advise when I'm consulting with final mile owners, or even when we were operating our business before we sold it, you want to try to tie back any of those control areas back to the customer and to the scope of work. So the customer or this piece of work requires A, B, or C. Can you comply with that? And so that's the way you kind of be able to, versus I'm telling you, you have to do A, B, and C. If it's coming from the customer and you accept the job, then you understand this is part of the scope of work.
Yep. This right here is probably one of the biggest issues. And this is one of the areas that I think the whole industry is growing up. You pointed that out. It used to be, kind of the backwater of the logistics business, but it isn't going anywhere. And it needs to meet the standards of the biggest companies in the world that have high expectations. And by the way, they're comparing you to Amazon. So you got to get it right. And I think this is just a real challenge. Second thing I want to talk to you about is underpricing. Before we hit the record button, you said, Joe, a lot of these companies are underpricing their services. And I know that's true. Please explain.
Yeah, when you say final mile or last mile, that could literally mean 100 different things to 100 different people. And going back to that association I mentioned earlier, the CLDA, we changed our name, I think in 2012, from the MCAA, the Messenger Courier Association of America, to the Customized Logistics and Delivery Association. And that word customized was key, because when we surveyed kind of our members, but our members' customers, that was the one thing they said was unique about what the service we provide, that they're customized. And so anytime you're doing anything customized, like, it's hard to standardize it too, because every single delivery, every single client could want something done with a little different nuance to it. And so from a pricing standpoint, what I see a lot of times as a failure is companies are not understanding their cost. And those costs change depending on the type of service you're providing to the client you're providing. And I think, in many cases, I see final mile owners just, grabbing a rate sheet that they have found online, or maybe they picked it up from a competitor nearby, and they're just dropping our rates. And two reasons that this is a big issue. One, some of these rates are outdated. Right? I mean, it's as if they have not realized that inflation is a real thing. And I see some companies have the same rates in place from 5 years ago that they have today, when everything else is going up. And the second thing is really, this transportation is a low margin industry. There's not a lot of meat on the bone. And so when you don't understand your costs, when I say cost, I think costs in direct costs, vehicle, gas, all the hard costs, indirect costs, which could be, management oversight of the operation, administrative stuff. And then you have some hidden costs. And these hidden costs could be things such as, think about this like insurance, right? So insurance, you think of direct costs, but if you don't do certain things right in insurance, it could be some hidden costs there that can add on to it. If you don't properly put DEF fluid in the vehicle, right, that's going to ruin the fuel. If the driver is, you mentioned earlier, operating a bigger vehicle in a neighborhood where it's got low-hanging trees and they peel the back of that straight truck off. These are costs that can totally, ruin your performance and claims. A lot of times we're doing deliveries inside someone's home or business. One claim could end your whole month's profitability.
Yeah. I think we started seeing this during COVID when there was a boom, and thank God the gig economy saved us in many regards. But I think what we started realizing was those drivers started realizing is like, oh, I'm driving all week. I made $2,000, and then you go, how many gallons of gas? Do you have the proper insurance on your car? Maybe not. Did you factor in the fact that you're going to need a new car pretty soon because of the miles you're putting on it? And I think it's really easy to kind of be excited about the $2,000 that you made just delivering stuff, and you forgot about the wear and tear on your car. You might not have the proper insurances, as we talked about. You might say, there's lots of little things that you don't know about the business. And in this business, the devil is in the details.
100% it is. And those details, they can make or break you. They can make or break you.
This is why you need to get part of organizations like the CLDA, just because they'll help you understand what makes sense in this business and what doesn't.
Yeah, it will. And just networking, finding a mentor, CLDA helps with a lot of that. And I've been very proud to be a part of that association, and it's done wonders for a lot of companies. And nowadays there's so many resources online you can access to get this education. But I think fundamentally, time is money. And when you're pricing something out, you have to think about every component of that service, where it's costing time, where's a touch point. And it has to be a dollar amount associated with that. Because look, when you talk about independent contractors, as your, most, I would say 75% of the players in the space probably use that model. You got to look at them as another customer, right? They're not an employee. They are another customer. You have to constantly be thinking about how can you keep this group of your driver fleet.
And by the way, in Lyft and Uber, I don't think they've done a particularly good job on that. And those are fantastic companies. But I live kind of in, it's suburban, but it's a sparsely populated area. There's always a new Lyft guy. And when I would call like Lyft, and I remember this guy's telling me, oh, I'm making this much money. And I was thinking, I doubt it. And then the next time I call, they're like, we don't have Lyft drivers in your neighborhood. I was like, yeah, there's good reason. It's a hard job.
Yeah. And Joe, I would actually say the stakes are even higher. So the Lyft and Uber, I put those in the gig kind of category. When I think about final mile, at least the place I come from, the drivers may be independent contractors, but it's not gig workers, because a lot of the solutions we're doing, we're talking about, we deliver for blood banks, hospitals.
So life and death.
Life and death stuff. So you don't want this very transient driver fleet popping in and out. You want to have some stability there, particularly around your core clients and the high critical deliveries you're doing. So it's even more critical that you price things out properly, because the number one reason a driver is going to stay on a job is because they're getting fairly compensated.
Yeah. I think, you tell me if I'm wrong, I suspect recruiting and keeping all those guys happy and trained and retained is a hidden cost that a lot of these companies didn't anticipate. So they don't say, I, as the CEO of my company, spent this much time recruiting, this much time training, this much time retaining the people I got.
Yeah, I think, and I would say I would caution to say recruiting, because recruiting tends to lean towards an employee. So,
Yeah, employees, I get it. Yeah, these are ICs and intercom. Yeah, yeah. This is the challenge in this business. It's really easy to call an employee an independent contractor. I just did it.
it is. It is truly a challenge. It's something that you have to be, as a leader organization, you have to be constantly aware of, constantly preach downstream to the frontline folks who are probably having these interactions. We would spend a lot of time when I had my business talking to our dispatch team about what to say and what not to say when communicating with a driver.
Oh yeah, because if you said, "Oh,
If you
the
simply say,
boss," you said
hey,
the boss is mad at you. You're like, "What? I'm an independent contractor, right?"
or if you just say, driver may not fully, and sometimes these drivers don't fully understand, what the independent contractor means. So they'll say, hey, when am I getting my paycheck? Well, you don't get a paycheck. You get a settlement, And so these little bitty words, but if you ever get inside of a courtroom and you got to defend yourself, you'll be very surprised how these things can come back to bite you.
Yeah. Oh yeah. By the way, I saw a few years ago, a friend of mine sent me a contract. He says, "Hey, this company wants me to do this work for them," and I said, "This is an employment contract that they modified, but you're an independent contractor, but everything in here acts as if you're an employee. Just changing it from employee to independent contractor doesn't matter." I said, just Google it. What does the government consider an independent contractor? And there's like 7 or 8 questions. And I said, we went through them together. And I said, there's like everything they put in this contract is against the rule. That you're an employee there. And I said, but they don't want to treat you like one.
Yeah, yeah. And I think that's even down to the uniforms, right? So if my delivery company is called Last or First, I would not want my drivers, my contract drivers, to wear this. I need to be paying them an advertising fee for representing my brand. So even that subtle difference can draw a line between W-2 versus 1099.
This is not easy. Not easy. So the next failure that you told me about before we hit the record button was saying yes to the wrong people. Who are the wrong people, man?
Yeah, I think one thing I see a lot in the final mile space is companies in this space have a hard time saying no to what I think is bad business, right? And I think there's a couple reasons for this. One, as we mentioned, historically speaking, this particular sector of supply chain has been the stepchild. I think you referred to earlier. It's kind of like just disconnected from
it's the backwater, man.
Yeah, and so I think that has that has gotten to the headspace of folks in our industry where we're always concerned about losing business or not being able to get that next customer, and so we may find ourselves in these bad customer contracts, whether it be the client's not paying us timely, whether it be they're not paying us enough money, we want to go up on an increase, or whether they want us to exercise more control, but our model may not allow us to do that. We're very hesitant to depart from those client relationships. And look, I've been in that position myself, and it is a difficult thing to do. But I would say this. For many people out there, I was talking to someone the other day, and they had a customer that was paying them, the terms were net 90, and they're getting paid in 100. And they got so bad that they're now having to work with a factoring company. And as we said earlier, there's just not enough meat on the bone in this particular industry to have a factoring company involved. And I was trying to advise this owner about, hey, you need to really hold the customer accountable. And if they can't, abide by your terms, then you need to fire them. Oh no, I can't fire them. I can't do this.
I need them too badly. They're my biggest customer. Yeah.
And I'm like, this customer is literally running your business in the ground. Like literally, you don't have the cash flow to make certain payments.
Yeah. And by the way, they're getting paid in 30 days. And so they're just holding that money. Like, that makes
and it's sense. Because a lot of times, and this owner told me that the client even threatened that, hey, I will just call a bigger company. I'll call, Amazon or Uber or Lyft or whoever they were referencing. And I said, you should call them right now. You should call them because I guarantee you those companies won't allow them to, to kind of, have the tail wagging the dog as this case. So I think that the challenge really is to understand that you bring value to these equations, and that, if it's not working out for you, say no. I promise you, there's more and more opportunities out there that will be a good fit for your business.
I think what you just described there, and I think there's a lot of people listening who are not necessarily in final mile who are saying that's a problem in this whole business. The logistics business is you say yes because you're desperate and you want to grow. Warehousing had this problem. All these e-commerce companies popped up, and a lot of them were very small, and everybody said yes to them. And then realized I can't serve them right because they're too small. I need to make more money. And there's a lot of companies, I've worked at them, where you go, I got 2 customers that make up 80% of my business. And these other ones, you have to kind of go and look and say, are they worth it?
Truly. I'll give you one quick example. I had a customer years ago, represented 42% of our company's revenue. And I mean, we were, you might as well call us, I don't say the name, but we were pretty much in business to serve them. And I was really, really concerned about losing that business. But ultimately, when we talk about some of those hidden costs, when we looked at all the costs we're spending, not just the drivers, but the management team and everyone else to serve this client.
Yeah, your time spent on it.
Yeah. And so, but here's the thing, when we exit that business, a year later, I had brought on 7 different accounts. We had made up the revenue. We weren't so much concentrated, and it opened us up for more opportunities. And so, but had I stayed in that one lane and just let this customer dictate us, we would have never ventured beyond that.
This is one of those cash flow things where it's just hard to do it. But to your point, saying yes to the wrong people is a failure in this business. And again, you keep saying it, there's not enough meat on the bones to have a customer that's got that's not treating you right, especially if they're really big. So this kind of relates closely to the next one. And you said the fourth issue is undervaluing what you do for your customers. It seems like that's very closely related to what we talked about underpricing, but also saying yes to the wrong people. What do you mean by undervaluing?
They are closely related. Think about you referenced COVID, a little bit earlier in the conversation. And COVID was, our industry was quickly designated as an essential industry. You had everyone at home, and everyone still needed, things to get to them wherever they were. And so our industry, fortunately, again, we were able to capitalize on a lot of opportunities. But it was in that, 12, 18-month window where we saw the value of the final mile, last mile industry. To me, they
were the lifesavers.
It was truly, I mean, even when you get beyond, just all the parcel stuff, but the true life-saving things that we delivered, the mask, the company I was with that I exited to drop off, we were doing, literally picking up from probably almost 1,000 CVS locations every single day, picking up, COVID samples and flying it to a big lab on the West Coast. Just to make sure people, if they understood they had COVID, to understand they had COVID so they can treat it. So you saw that. You also saw what happened e-commerce, right? The Band-Aid got ripped off. We were trending that direction. But my grandmother, who at the time was probably in her late 80s, she was ordering stuff offline.
Oh yeah, I taught my mom to shop online during that time.
Yeah, it was amazing. Because everyone was necessity breeds all invention, and so there was a lot of value that our sector brought to the world, truly the world at that time. And then what I think was happened, since then, we've seen some of that slip away, and that's frustrating for me, someone that is literally born into the last mile, led an organization. I now sell insurance. I host a podcast about it. I want to see this industry hold our value and really raise our value to where we're valued just as much as the maritime industry is valued, the air industry is valued, the rail industry is valued, even some parts of the ground sector are valued. And I think we forget that sometimes. I think we forget it as the owners. I think consumers forget. If you go to a Walgreens store today and you got to get your kids some Tylenol, I guarantee you that Tylenol was delivered by a last mile company. And so part of it is just understanding what we bring to the table. And that goes back to pricing, how you negotiate, how you say no. but more importantly, just how you look at the world and understand that we're bringing something of serious value to these equations, and we're no longer the stepchild of supply chain.
Yep. Yeah, you got to know your worth. And I think as the baby boomers retire, and again, a lot of them are healthy and they're going to stick around for past the normal retirement age. But I think some of them probably do some of this kind of work. You're going to pay them or they're going to go home. Anybody who's willing to work can get good pay these days. And so the idea that you go, well, you're lucky to have this job. If somebody says that to you right now, you're like, huh, you kidding me? Now I get it. Like if you say, hey, I'm a director of sales of this big company or vice president of this or that, and you are getting, huge compensation. But if you're saying a job where you're delivering stuff and somebody says, oh, you're lucky to have this, you're like, what, are you kidding me? I'll leave here and go down the street and make the same money or more. And so you've got to treat the people right, and that means you got to value them. It means you got to get the money right, and people want to be treated right. I think maybe even more so than the money, but both of them it's got to add up because we got to recruit people to this space.
100%. Like when I talk to owners all the time in this industry about what their challenges and pain points are, when you cut through a lot of the noise, what it comes down to is there's not enough margin to access the resources and things we need to invest in the people, invest in technology, invest in the risk management, invest in the marketing, invest in all the things that we want. And I think that's what I try to talk to owners about. Hey, you understand your value here. Like you're bringing a lot of value to the supply chain, to the industry, to the world. Like you shouldn't be comfortable operating on 3-5% margin. That's you work. And then Joe, and you know this from your own experience, like there's not a more harder working industry than transportation, in my opinion. And in this space, last mile, you're talking about a lot of little bitty deliveries have to add up to make a whole pie. And so, I just want people to understand how valuable those pieces are.
Jason, I live in the suburbs, like an hour from Detroit. It's not a lot of traffic out here, but if I got my car right now, school's out, I'd be driving for about 15 minutes before I get frustrated with what's going on here. So the idea that I could drive around all day in traffic, oh man, that's a hard job. So these guys got to be compensated. Anyway, last one, the fifth failure. And by the way, I've been thinking about this one ever since I talked to you the other day. It's being underinsured. And by the way, everything we've talked about so far comes down to risk. And that risk is why you have insurance. So please talk about the underinsured final mile business.
Yeah. So I'll give you a quick little background. So when I first got into the insurance industry, probably 2.5 years ago, I spent the first few months calling underwriters, insurance underwriters, carriers to understand, because I knew from my own experience, this particular category sector is high risk. And I want to understand what they saw. And so there's 3 things that they pointed out to me. One, this particular sector is not regulated. There's no, the DOT, Department of Transportation, really starts its regulations at vehicles that's 10,000 pounds and above, unless you're doing some type of hazmat transportation. Lack of visibility, right? So because of the sheer nature of our driver model being more prevalent on the independent contractor side, you're unable to put telematics and different tools in the vehicle so you can get more reporting on driver performance and how that, captures your risk profile.
So they don't know who they're talking to.
Yeah. And then 3, just by nature of what we do, we're making multiple stops, most times inside of urban markets. You're in unmarked vehicles. They're more prone for theft. The value of the cargo, it's easier to steal cargo out of a van or a SUV than a box truck that may have be locked on the back end of the truck. And so the combination of all these things, unfortunately, it creates a higher risk profile for our sector, which means higher premium costs. And that leads to, I think, companies sometimes intentionally, sometimes unintentionally being underinsured. whether because they either can't afford it or for some of the other points we mentioned, they just are not aware of all the insurances they may need.
Yeah, I think it's a lean business model. So I think a lot of people are trying to cut a corner here or there to make some money and grow their business.
Yeah, you see that. And look, I grew up in this industry, I operate our business for 14 years. I get it. It's a low margin industry and it's tough. But the reality is, you don't want to be, penny wise and pound foolish. And so, particularly when you're looking at, independent contractors, there's certain insurances you want to have, you got to have in place. Hire not own coverage to protect your business on behalf of the independent contractor, or contingent auto liability coverage. And then for your drivers, if you're using 1099s, you want to mandate in your contract with them that they have occupational accidental insurance coverage, short for OCAC, which essentially is like a workers' comp policy, but for independent contractors. So that scenario I gave earlier in the conversation, if that driver gets in an accident, they won't have to go to their lawyer because they'll have a policy that's going to give them some benefits there to help them with their medical bills and even short-term, long-term disability. And so what I see right now in the final mile space is not all companies, because some companies do it, by the book, and they're making the proper investments. But the insurance costs is continue to ratchet up higher and higher. And because we've lost some of that value, some of that cachet we had in COVID, the math is not mathing. And so companies are having to make some very tough decisions, whether I lower my lower my limits, or so I can have a lower premium, and I'm gonna just take on a little bit more risk. One of the things I do at CUI and why I joined the organization is that we specialize in captive insurance. And captive insurance is a way of taking control of your insurance if it's the right fit. You got, it's not for everyone, but essentially it turns insurance from a liability into an asset. And you're only rated based off of your particular company's exposure history and profile. So it behooves you to really invest in risk management, risk mitigation on the front end.
Yep. I think it's a selling point potentially to say to a shipper, hey guys, if you guys are doing things right. You're a Fortune 500 company, Fortune 5,000, whatever you want us to do delivery. We are doing everything right. We are vetting drivers. They are independent contractors. And by the way, we've done the best practice to make sure that's actually true, because we don't want any of this to splash back on us or you. And we are properly insured. And we say we specialize in your business, whatever it might be. And I think I heard two companies say this in my podcast. They're both over the road trucking companies. They say, this is so much easier said than done. Easy to do on a podcast. They'll say, we're never the lowest price. We're not even close. We're probably the highest price. But the customers who buy from us buy because they share our values. We do things right. And doing things right costs more money. And, I can't imagine big firms want to put themselves at risk. And yet it's really easy in this business to sell, and commodity pricing is like, oh, if you can match this pricing, if I match that pricing, I had to go take my insurances off and take some risk. And that makes no sense.
It's something that is a big challenge in this space because, you're right. You would think that some of these larger shippers or customers that's using our services would value, a company that's doing it the right way, making all the right investments and following the letter of the law. But the reality is they're quick to go to the next provider that's going to go $1 less per delivery. And so I do think that is a challenge. In my opinion, I think hopefully that can be solved by, on our side, last mile side, making sure that we kind of hold our value, hold the line, right? Rising tide lifts all boats. And the shippers and manufacturers will kind of come online for that. But the other point I would say is that, in today's time, right, when you're thinking about supply chain, shipping, e-commerce, all these things, ordering things from your phone, consumers, and this is where I think there's an opportunity here to humanize the last mile in a way, because consumers are the ones really driving this because of the change in behavior. Everyone wants it yesterday. So if you truly want it yesterday and that's of value to you, you should be paying for that value. There are no free deliveries, ladies and gentlemen. It doesn't happen. It doesn't exist.
Right. Right. Exactly. So I'm going to summarize what we talked about, and then I'm going to get your final thoughts on the topic, Jason. So I'm talking to my friend Jason Burns. We're talking about the 5 failures of final mile. And we talked about driver misclassification. And a lot of people are saying that these people are independent contractors, but they're treating them like employees. Big risk. Underpricing is a big problem. Not capturing all of this is a very nuanced business. It seems simple, but there's a lot of hidden costs. That's why you've got to get on top of those costs. Saying yes to the wrong people, I think underpricing relates to that. Go, oh, I'm not making much, but boy, our costs are low. Not as low as you think they are. This gets to undervaluing. We got to value what we're doing. And this is a critical piece of the logistics and supply chain. And we got to treat ourselves like we are part of that. And last but not least, underinsured. Everything we talked about today relates to risk, quality risk, legal risk, cost risk. And that's why you get insurance. So yeah, I think I would also say maybe a kind of a corollary to this is your regular insurance guy might not know anything about this business. And that's a problem. So you want to work with somebody like Jason who specializes in it.
Yeah, thank you for that. Yeah, I mean, obviously, look, like I said, I'm not an insurance guy. I don't really believe in selling people. If I can provide value, whether it's going to benefit me or not, that's my MO. But you're right, particularly in this space, this is such a unique industry. You really want to work with someone that truly understands all these gaps and these hidden areas, because it doesn't take much to get yourself in harm's way.
So put a big old bow on this one. Final thoughts on the topic, Jason Burns.
Yeah, I would say, look, if you are an owner in the final mile, last mile space, even the gig space, and you are looking to understand more about how to, I'll back it up. If you want to know the things that I now know about risk management insurance that I wish I would have known when I was operating, you can find me online. CUI Insurance Agency is the company. You can find
and they can listen to your podcast.
That was the second plug. You jumping ahead. I got that plug coming next. If you're also in this space and you want to understand from the lens of the people that are driving this industry, this sector, from last to now first to today's supply chain, check out our podcast. It's last to first. I am forced to interview some of the top players in this industry, and they share a lot of insights, a lot of nuggets and stories and examples of how they've overcome business and personal success to challenges to find success. And it's one of the fastest growing podcasts out there in the space. We've been air since 6 months ago, and we've already had a couple 100,000 views of all the episodes. So it's a really cool resource, and I get as excited as the audience to learn about these guys and what they're doing.
Big on YouTube too.
Big on YouTube, yeah. Everything we do, YouTube, Apple, Spotify. You can find us there, and on social media. So last to first.
It's the word last, and then the number 2, and then first. So what I'll do, Jason, is I'll put a link to your LinkedIn profile, link to your website, link to your podcast. Any other links you give me, I will put in the show notes so people can reach out and follow you, reach out and contact you. Jason Miller. I was thinking about Jason Miller, the supply chain guy. Jason Burns, thank you so much for taking the time today.
But I want to thank you too, because I've been watching your podcast and what you've been doing for many years now.
Thank you.
And you've been an inspiration to me. And so continued success to you and what you're doing with your podcast. And hopefully, you can continue to bring more value to this industry, because I think what you do and how you do it is very important.
Yeah, we get the best job at the podcasters. You get to talk to all the cool kids. I've learned so much. I've also gotten so many people from doing it. It's a fantastic gig.
Yeah, 100%.
Thank you so much for the shout out.
Thank you.
All right, man. Jason Burns, thank you so much. And thank all of you for listening to my podcast. Your support's very much appreciated. Until next time, onward and upward. You have been listening to the Logistics of Logistics podcast, where we engage with leaders in the logistics and supply chain community. If you like what you hear, please subscribe, hit the like button, and leave us a nice review on Apple or Spotify or wherever else you listen. Also, please check out our videos on YouTube and connect with us on LinkedIn. We're very big on LinkedIn. And you can also reach us on the logisticsoflogistics.com, our website.